All right, good afternoon, everyone. Welcome to the second day of training for the program year 2023 Energy Assistance Program. Today, we are going to be focusing largely on income eligibility determination and calculation. And then today is obviously I'm here today. I'm not going to be presenting a pre-record training. So I'm hoping today is going to be a little bit more interactive. And really, I would like to provide whatever level of support the group needs with regards to going through this training. So if it turns out to be what the group wants or needs, we can spend the entire 2 hours on income. Otherwise, what we will do is we can spend an hour on income and then an hour on fraud, waste, and abuse. So we'll just see how it goes. I'll take the temperature of the group at about 2 o'clock, and we will proceed accordingly. All right, so I'm going to share my screen. Right. So again, right now we're going through the income eligibility determination and calculation. We'll be looking at income eligibility determination fundamentals, the tools that are available to you, how to document different sources of income, and general reminders and takeaways. So for program year 2023, we are going to continue with the changes that we made last year. So as a reminder, we have switched the eligibility model from a threshold, kind of a hybrid threshold that used 60% of state median income until it was outpaced by 150% of the federal poverty guidelines limit. And we've switched over to just using 60% of state median income for all households. Historically, that outpacing of the federal poverty guidelines has occurred somewhere between household sizes of 8 and 10. So this year, and I think this is the same as last year, that outpacing happens at a household of 9. It's not quite as narrow as it was last year. I think last year that outpacing was a margin of just like a couple $100. We're looking at closer to just over $1,500 this year, that gulf between the 60% of SMI and the 150% of FPL. But once again, we are interested in analyzing the continuing effects of this change. Mostly what we're interested in is seeing if it has an impact on overall eligibility. So we ask that if you have any denials for household size 9 and above, if you can report those to us and let us know kind of what the margin was on that income denial, it would just help us to know whether these policy changes that we've instituted are having an effect on low-income households and just how much of an effect it is having. And the second change from last year that we are continuing is the refining of the definition of income eligibility period to provide greater consistency for all applicants and across subgrantees. So as I'm sure you all remember, last year we kind of did the firmest definition we've had thus far of the income eligibility period. And so we are going to be looking at either the 3 most recent complete months prior to the date of application or the 13 weeks immediately preceding the date of application. This income or this definition does exclude the current month of application as part of the eligibility determination, except in very narrow and limited circumstances. And those circumstances are listed here. But namely, the household receives only fixed income, such as Social Security Administration administered benefits, and they have already received their benefits for the month of the application, and they do not expect to receive any more income. If it is the last day of the month, then the current month is a complete month, of course. And then the third situation here, which is a possible exception, is if the household's pay schedule is such that they can reasonably expect to receive no further income for the remainder of the month. And providing that additional documentation would be burdensome for the applicant. So an example of that would be, suppose it's November 22nd. There's a household of 3 presenting as 1 adult receiving SSI, 1 adult receiving wages for employment, and 1 child. The adult with employment presents a check stub for November 18th. So if the employed adult's check stub indicates that they are paid on a 2-week pay period, then since they provide that November 18th pay stub, you can calculate that their next paycheck is going to be received on December 4th. The applicant states that they no longer have access to the October 22nd pay stub. In this instance, it would be acceptable to count November as a complete month because there is going to be no further pay in November, and you would use September, October, and November income. And rationale for using this as opposed to using the August, September, October should be noted in the case file. However, if the employed adult's check stub indicates that they're paid on a 1-week pay period, then you know that the adult will receive another paycheck on November 25th. Therefore, November is not a complete month of income. So you must either use the August, September, and October income, or you can use that current check stub and count 13 weeks of income from the date of application. Also note that except in cases where the drastic loss of income policy is being used, in households where there are mixed income sources, you have to use the same income eligibility period for the entire household. You can't mix and match and use 13 weeks for one member and 3 complete months for the other member if they're both receiving pay in the same household. So these changes, as just to refresh everyone's memory, were made for a few different reasons. The first related to the change to away from the hybrid threshold to straight 60% of SMI was related to federal guidance for the water program, which when it first came out, when we were modeling our programs, was pretty specific that we could not use a hybrid threshold. We had to choose one or the other. We wanted to kind of simplify and streamline our practices and policies as a state. We wanted to ensure that everything was consistent across the state, that someone who was applying in Marion County could expect the same thing in Monroe County, in Lake County, in anywhere in the state. We wanted there to be more consistency, and we also wanted equity between all of the applicants in the state. So let's move on to the tools that we have available to you. IHCDA is trying to make tools available to facilitate and reduce the burden of income calculation. We're aware that income calculation has over the years been a pretty consistent pain point. And so we strongly encourage all subgrantees to train their intake on the use of tools to help reduce that burden. So we do provide and actually Elaine at Area 5 in particular is very instrumental in this. And I know that she had help from other people in the network, I believe, in developing these tools. But Elaine has, over the past several years, helped to provide a workbook of income calculation spreadsheets. In addition, we worked pretty closely with Rowing last year in enhancing the onboard calculator within EAP Connect. And we do have a spreadsheet for the 13-week employment income calculator that we have that we made available to agencies upon request last year. And this year, I'm happy to say that the pilot went well last year, and that will be made available to all agencies openly, just as part of the tools and appendices that we have available to you. So our goal is that subgrantees should feel confident in their income calculations and the accuracy of their benefit determination. And as always, we do welcome feedback and suggestions. The benefits of using income calculation spreadsheets and these other tools for calculating income include they help to just eliminate mathematical errors. I'm not going to say that they completely remove the possibility of human error just because you're still keying in numbers, and obviously there's every possibility of missing a number or of typing the numbers in the wrong order. But really, by taking away the burden of the calculation, it makes that human error more of a mechanical than a process error. It provides a clear picture of how the income is being calculated. It makes it easier to double check and verify that income is entered correctly. It shows our monitor, and by extension, any potential HHS monitor, how those calculations were figured, and it reduces errors in how crisis is calculated. So if intake uses an Excel spreadsheet to calculate income, that spreadsheet should be scanned or saved and uploaded into the client file in order to show the calculation. For documentation, remember that in most cases, the manual lists acceptable forms of income for different income sources and does list those in order of preference. Whenever a less preferred form of documentation is accepted, intake should note in the case file why the more preferred forms were unavailable. And also remember that income verification affidavits, or IVAs, should only be accepted as a last resort. For employment income, for example, a request for earnings should be attempted before accepting income verification affidavits. Income is always calculated based on the date of application, not the date of application processing. For instance, if an application is received on December 13th, but is not processed until February 1st, then remember that the income eligibility period will be determined based on that application date of December 13th. As long as income documentation is current as of the date of application, intake shall use the documentation submitted as part of the application without requesting updated information. And in the example above, if the applicant submitted a 2-week pay stub dated December 3rd, so the example above is this December 13th application date that was processed on February 1st. So if the applicant submitted a 2-week pay stub dated December 3rd, the intake shall not request a pay stub for January 28th, since December 3rd would have been the current pay stub as of the time of application. However, if the applicant turned in a pay stub for November 5th, intake may request a more current pay stub or seek clarification that November 5th was the applicant's final pay with that employer. All right, moving on to the different sources of income. So for earned income, we have wages, salary, tips, bonuses, commissions, self-employment, profits from a business. We will count military allotments. However, we exclude combat zone pay. Disability payments from insurance, Social Security, SSI, railroad retirement, railroad disability benefits, Black lung survivor benefits, income from rental property, life insurance payments, dividends, interest, gambling winnings, awards, pensions and annuities, retirement plans, royalties, strike benefits, unemployment benefits, veteran benefits, regular life insurance payments, workers' compensation, alimony payments, irregular income or odd jobs, and household support. First thing that we're going to look at, just because it tends to be the easiest, is fixed income sources. So these are primarily going to be federally administered benefits, Social Security, SSDI, supplemental security income, railroad retirement, VA benefits, things of that sort. So in the cases of these fixed income sources, the intake may simply take the current monthly amount and multiply it by 3 in order to determine eligibility income. The only exception for that would be in January or February if the applicant presents a letter showing the 2022 monthly benefit as well as a 2023 benefit with the COLA increase, then the intake should take care to apply the COLA rate to the appropriate months. And I think I talked about this a little bit in one of the videos yesterday. So if they apply in January and the letter has both the 2022 and the 2023 amounts, then they would apply the 2023 amount to January and the 2022 amount to November, December. Of course, if it's a mixed income household where you're taking the most recent 3 complete months, then it would be perfectly acceptable at that point, as long as the situation applies, to actually just use the 2022 amount and count October, November, December in order to match the earned income for the other household members. If you receive a letter that says that there's going to be a COLA increase and gives a percentage but does not give the new monthly amount, please do not have your intake calculate that COLA amount. You can just take that 2022 amount, since that's the one that's actually explicated on the letter, and just use that amount. And the other thing to take note of with fixed income is that that the federally administered benefits are really the only income source where we're going to be using the net amount after withholdings and deductions, rather than using that gross amount before the withholdings or deductions are taken out. Now, for non-federally administered fixed income sources, such as pension or recurring payment retire plans, you're just going to take the current monthly amount and multiply by 3 in order to determine eligibility income. These typically are fixed without any kind of COLA adjustment, and so you're not going to have to worry about whether there's a certain amount that falls within these months and a certain amount for other months. You can just simply take it and multiply it by 3. Our state plan does indicate to the feds that we are considering the gross amount of this income. Therefore, you should request a copy of the benefit award letter or a physical check stub showing the full benefit amount prior to withholdings or deductions, if the applicant is able to provide it, rather than a bank statement. It's usually a toss-up whether there are deductions and withholdings taken out from those non-federally administered pensions and things like that. So if they are able to provide it, we should be requesting it. And if they aren't able to provide that, just note that in the case file.
Hey, Tom, I don't want to interrupt, but a
Yeah.
question just came up like right in the moment, so I thought it might be good to answer it.
Sure.
Julie Wilson asked, did you just say that we need to use all 2022 Social Security earnings if we are using another member's earned income from October, November, December for someone applying in January? If so, does that mean even if they are providing their 2023 benefit letter showing 2023 amount?
That is a fantastic question, and I can see where that can be difficult. So I am going to go ahead and say, so while we would definitely prefer to have to be considering that same time period for everyone in the house, I will say that with the fixed income, we do offer, especially because the COLA typically is not significant enough to change status usually of an applicant. We do allow that flexibility where, if we don't have the COLA amount, we'll just use the 2022. I think it can work in the other way also. So rather than have them, I am going to make that call right now. Rather than have them try to supply documentation of what that 2022 amount is, in that scenario, it's perfectly okay to just use 2023. Thanks for that question, Julie.
And I'll probably only chime in with questions that are like specifically in that moment. Did you just say that?
And
Okay.
that was a great question. All right, so on to unemployment benefits. Unemployment benefits may be documented via a last known employer or LKE report obtained by the LSP from the Department of Workforce Development, or via an applicant's printout of their benefit status from the uplink interface. If the applicant provides an uplink report, we will require the full report with payment details. I do see a lot of people uploading just a screenshot, which usually does not have full details. It usually doesn't capture the entire report. Usually doesn't have anyone's identifiers or names on it. So that screenshot really is not going to be sufficient. They're going to have to provide the full report. The full state provided benefit must be considered along with any federal supplemental benefits. The amount for each week may be calculated by considering gross paid plus the total withholdings. And the process date should be considered as opposed to the claim date. We want to know when they're actually receiving these benefits and not when they filed for them, because sometimes they're paid out weeks or even months later. Now, if you have someone where it looks like they had several weeks that were kind of approved all at once, and it's looking a lot like a lump sum, just let us know about that, and we can take a look at the details of it and make a determination. It might be a situation where it's worth making that exception, but we want to really be able to examine those on a case-by-case basis rather than giving a blanket guidance. All right, next up we have.
I'm sorry, can you repeat that last comment you just said about the unemployment with the large funds?
Yeah. So if you have a case where because that what I was saying about the claim date and the process date, and that sometimes it can be weeks or even months later before a claim is processed for whatever reason. If you see a case where like someone's getting like 6 weeks worth of claim submissions processed all at once, and it looks a lot like a lump sum, just let us know about it so that we can review it and advise whether it might be worth doing an exception on. We just don't want to kind of give blanket exceptions on that.
Thank you.
Yep. Does that make sense, Rosa?
Yeah, it does.
All right, on to self-employment. Self-employment can include profit or loss from a business, rental income, royalties, partnerships, S corporations, estates, trusts, farming, or church employee income. Because of the nature of self-employment income is calculated based on the most recent complete tax year. The income for the full year is divided by 4 to determine the representative 3-month income. If the applicant's self-employment income was not present during the previous tax year, intake should attempt to obtain 3 months worth of receipts accompanied by an income verification affidavit. And if the applicant does not file taxes for the self-employment income, is to be considered irregular or incidental income, not self-employment, and will be documented with an IVA. So again, in order to properly document self-employment income, the applicant must submit their entire previous year Form 1040 tax return, including any applicable self-employment schedules. So that means we're going to want the entire 1040 packet. Typically, if they have any self-employment, they should have a Schedule 1. So Schedule 1 is for additional income and adjustments to income. You're not necessarily going to be pulling any numbers from the Schedule 1, but what the Schedule 1 does is it summarizes what kind of income is included in the return and should indicate what other schedules should be attached. And really the schedules that we are interested in looking at for self-employment could be a Schedule C, a Schedule E. Those are the two most common ones that we see. And on occasion, you might see a Schedule F or a Schedule SE, but I'll be honest, those are pretty few and far between. So mostly we're going to be concerned with Schedule C or Schedule E. Schedule C is the most common one. That's profit or loss from business, I think sole proprietorship. And for that, we're just going to take line 5. That's the gross profit. Now, the second most common one that we see is the Schedule E. So that's your supplemental income and loss. And that does cover multiple different types of income. So depending on what they have, we might be using different lines. So if there's anything on line 3, that indicates that they received rent for property that they own. If you see anything on line 4, that's for royalties that were received. Partnerships and S corporations, that would be line 32, which is total partnership and S corporation income or loss. I don't know that I've ever seen anything on line 37, 39, or 40 in any of our applications, but those are the other 3 lines on a Schedule E that indicate income that we would be counting. So line 37 would be for estates and trusts. Line 39 is for real estate mortgage investment conduits. And line 40 is for farm rental income or loss. If someone has profit or loss from farming, they should be submitting a Schedule F. On Schedule F, we would be taking line 9, which is pretty much the equivalent of line 5 on the Schedule C. And finally, if they have a Schedule SE, you're only going to see that in, for our purposes, the only time we're going to use a Schedule SE is if they're a church employee. And so we would be using line 5A for that. And that is just from the long form Schedule SE. Again, I don't know that I've ever seen that in an EAP application, but because it is a form of income that would fall under our inclusions, I wanted to be sure that we had a policy to address it. So just as a reminder, we used to use line 7, which was gross income. We're now using line 5, which is gross profit. We also, as a reminder, we used to kind of look for that utility deduction, which I think used to be line 32, maybe on the Schedule C. But since we're now considering the gross profit as opposed to the AGI, that utility deduction is not being deducted. So we don't necessarily want to add it back in because at that point, we're adding in something that wasn't already deducted. So we're only adding to the income there. So we don't have to worry about the utility deduction. And if the applicant's self-employment income is 0 or shows a loss, then you can just record that income as 0. You're not going to enter a negative amount if they show a loss. And self-employed applicants do not have to follow procedures established for 0 income applicants. So they're not going to have to turn in an IVA showing 0 income or anything like that. Next up, we have earned income for salary and wages. As a reminder, we are not to use the last known employer report to identify or determine employment history or income. This is mostly because we are now looking at the most recent 3 months or 13 weeks, and there's always going to be that reporting lag with the DWD reports. Essentially, because of the timeline we're looking at, usually the The DWD reports are going to be at least a month behind. Sometimes if the employer is particularly slow with reporting them, it could be more than 3 months behind or more than a month behind. I have seen them sometimes be more than 3 months behind. So it's just not realistic to use those to determine the employment income. Employment income may be calculated using a pay stub or a pay statement, a request for earnings statement, or if neither of these methods are feasible, you may, as a last recourse, use the income verification affidavit. Please do note, because we have redefined the income eligibility period, W-2s are in general usually not going to reflect the time period that we need to catch for our eligibility determination. Therefore, W-2s are not considered a preferred document for employment income. The one exception for W-2s is that they may be used for applications during the month of January, as long as the LSP is considering the 3 most recent complete months of income for the household. So I'm gonna clarify and repeat that. So the only time that W-2s would work under our current employment income calculation policies is if the household applies in January, sometime between January 1, January 31, and if they provide that W-2 at the time of application, and if you are not using the 13-week method for this household, but are rather using 3 most recent complete months, because in that case, if they're applying in January, those 3 most recent complete months would be October, November, December. So at that point, a W-2 is going to give you the same end year-to-date gross as what that last pay stub of December would offer. So essentially, by using the W-2, it's exactly the same as using that final December pay stub. So at that point, you could calculate from 3 most recent complete months, but it's only in those very narrow circumstances. Once February 1 hits, your most recent 3 complete months are going to become November, December, January, and that W-2 is no longer going to be good for that. So I hope that made sense. I am happy to go into kind of more detail and provide more examples later on in the presentation. So to calculate income via the 3 most recent complete months, you must use the year-to-date amount from the last pay stub of the most recent complete months. For example, if an applicant applies on December 17th, you would be using the last pay stub received during the month of November. If the applicant provides the first pay stub from the current month, it is possible and acceptable to subtract that current gross pay from the year-to-date gross in order to determine what that year-to-date gross had been at the end of the most recent complete month. So, for example, an applicant is on a 2-week pay period. They apply on December 10th and December 17th, and they supply you with a December 10th pay stub. So you have a year-to-date gross that tells you as of December 10th, here's what they had. At that point, you can subtract the current gross pay from that year-to-date gross as of December 10th, and that will give you the year-to-date gross as of November 26th, which would have been the last pay stub for November. However, if they apply on December 17th and what they provide you with is actually a December 17th pay stub, if you subtract the current gross from that year to date, you're still only going to have the year to date gross as of December 3rd. And if they get paid every 2 weeks and they have a December 17th pay, you know they're going to have a December 31st pay. So unfortunately, that's one of those cases where if they're on a 2-week pay period and they have a 3 paycheck month, and they provide that middle paycheck, you're kind of stuck. There's not much you can do with it if you're using 3 complete months. So at that point, you would need either the December 3rd or November 19th pay stub. So you would take that year-to-date gross income from the end of the most recent complete month, using federal taxable gross if it's available. However, do note that if the check stub does not identify federal taxable gross amount, then you may not calculate that amount on your own. Identify how many months are represented by the pay stub. So in general, this is going to correspond to the month of the pay stub. That is, the November pay stub would be 11 months. The exception here is if the applicant discloses that they began work after the beginning of the year, then you would need to subtract any month for which no pay was received. So let's say the applicant says that they received their first paycheck in March. Then you know that January and February there was no pay. So you're actually going to take those 2 months for which there was no pay and subtract that from that current month. So that November pay stub now becomes a representative of 9 months instead of 11. Once you determine how many months of pay are represented in that check, then you are going to divide the year-to-date federal taxable gross or the year-to-date gross, depending on what's reported on the check, by the number of months represented in the year-to-date figure in order to determine the representative monthly rate. You are then going to take that representative monthly rate and multiply it by 3, which will give you the employment income for the eligibility determination period. Note that if the applicant is no longer working and more than a month has passed since their last pay date, you may need to adjust that multiplier in order to account for zero income months. So if the applicant stopped working in October and received zero income for November and applies in December, then you're actually only going to be using September and October wages. So you'll want to multiply that monthly rate by 2 and then 1 month of zero income. So that is 3 most recent complete months. And now let's jump into the 13-week method. So I'm going to start off here by going over the fundamental concepts that are at play. And a little bit later on, I'm going to go through a live demonstration of how we get that and how the spreadsheet works to provide that. So with the 13-week method, you can use the most recent available pay stub. You do need to note whether the pay period represents 1 or 2 weeks. You can then determine the week number out of 52 weeks represented by the pay date on the check. And so what I mean by that is if you consider that January 1st through January 7th is week 1, then it follows that January 20th would be week 3. So it's really kind of numbering the calendar weeks, determining where that pay date falls in, and identifying that week by its week number. If the pay period is a 2-week pay period, then if it falls on an odd number week, so say it's a 2-week pay period and you have a pay stub that falls on week 39, you are going to need to round that value up to 40. If the applicant started working after the beginning of the calendar year, then you need to try to determine approximately when their first pay occurred, determine the week number of that pay date, subtract 1, and then subtract it from the pay date week number. So say they started working 4 weeks into the year. And let's go with the example I gave earlier of they apply on week 39. You're going to round up to week 40. If they started working after 4 weeks in, you're going to take that 4, subtract 1 to get 3, then subtract that 3 from the 40 to get 37. So you're then going to take that year-to-date federal taxable gross or year-to-date gross, depending on the check, and divide it by the number of weeks represented on the paycheck. This will give you the representative weekly amount. Multiply the representative weekly amount by 13. This will give you the eligibility determination period income. And if the applicant is no longer working at the job, you will need to determine how many weeks have passed since last pay and adjust the multiplier accordingly. For instance, if the last pay was 4 weeks prior to application date, multiply the representative weekly amount by 9 and count 4 weeks as 0 income. How's that feeling? Clear as mud? So yes, so this is, I recognize, a very complicated and unwieldy process for intake staff to calculate by hand. And that is why we have developed a spreadsheet to automate this calculation with some simple data entry. And we have worked with Rowing to have it incorporated into EAP Connect. We did successfully pilot this method with multiple LSPs last year. And we are expanding the scope of the 13-week spreadsheet this year. The spreadsheet will be made available to all LSPs along with the final version of the manual and all forms and appendices by probably mid-August, I think I had said yesterday. We do strongly suggest that all subgrantees adopt the spreadsheet and ensure that their intake staff are trained on its use. And again, I am going to get once I get through this slideshow, I'm going to actually take you through a live demonstration of the spreadsheet, of how it works, of how it automates so many of those very complicated steps I just went through. And I'm also going to show how that calculation compares to using the 3 complete month calculation. So hopefully once I go through that demonstration, it'll make things a little bit more clear. But before we get to that, the next form of income documentation we have is the request for earnings statement. The request for earnings statement is a form that may be used to get wage information directly from the employer when an applicant is unable to provide pay stubs. It may also be helpful for applicants who are involved in gig work and have no concise report of aggregate earnings. It should be noted that there is a high potential for falsification of this form, and so we do strongly advise that you obtain the applicant's release signature on the form and also ask them for the contact information of their employer, and then contact the employer and figure out how to send it directly to them rather than entrusting the form to the applicant to have it filled out. And we have the income verification affidavit. The IVA allows applicants to declare any irregular or incidental income, declare any months of 0 income, or even a total 3-month 0 income for the eligibility determination period, or as the last resort to declare employment income for which they have no other documentation and documented attempts to obtain pay stubs or a request for earnings statement have failed. So note that we are required to use gross income for employment and not net income. Therefore, the best practice would be to verify an applicant's pay rate and average number of hours worked per week and document this and ensure that the figures provided on the IVA more or less jibe with that pay rate and average number of hours worked. If the applicant declares 0 income for any of the prior 3 months, the applicant must complete Section 3 of the IVA, explaining how they have met these financial needs while they have had 0 income. If they have declined to answer these questions, then the IVA is considered incomplete and invalid. At that point, you will need to either get the IVA fully completed by the applicant. It would be acceptable to verify the information through a conversation as long as you document that discussion in case notes, as long as it's made clear to the applicant that their signature on the IVA still applies to that discussion and it is still under penalties of fraud and perjury. If an applicant discloses in Section 3 that they have received cash payments for household support, and those cash payments have been made directly to them rather than to a third party such as landlord, utility, store, etc., then those cash payments made directly to them do need to be counted as household irregular income. So here is an example of a fully completed IVA. So hopefully you're able to see this with the I know that I have the side-by-side screen sharing going on, so I'm not sure how small this is looking for you guys right now, but I will be distributing the slides, of course. They should be up on the partner website next week. But in this case, we have Andy applicant who's submitted an IVA stating that he earned some money mowing lawns during the months of July, August, and September. And he claims he made $80 in July, $80 in August, and $60 in September, with nothing received in October. So he does, however, disclose down in section 3 that he did receive $200 a month for his rent or mortgage from his parents, and that was paid directly to him. So that means that in addition to the incidental income reported in section 1, it is incumbent on the intake to also count that $200 per month as income received by the household. The utilities, he does indicate he received help from his parents, and those were paid directly to the utilities. And other household expenses were provided by the parents and were paid directly to the store or retailer. And the only assistance received for food was food bank and SNAP benefits, and those do not count as income, so we don't need to worry about that. All right, so general tips and reminders. It may help, especially if you have a household with mixed income sources. It may help to chart the eligibility determination period for a particular file based on the application date in order to kind of visualize those months that are being counted, especially when you have household members working multiple jobs, or like I said, if you have people who are kind of on different schedules with their income. Just charting that might help to visualize. Remember that when you are looking at a bank statement, recurring payments, usually monthly payments, but it could be more frequently monthly, are often going to be marked for that PPD. So if you see that PPD marker, you know that that's something that's going to be repeating. Refunds, whether they are for store returns or bank fees, if you see any refunds on a bank statement, remember those are not going to be counted as income. We don't want to count something that is being returned to someone that they already paid out. If there are any unexplained deposits on a bank statement, an intake worker should ask the applicant about them, and just identify whether these unexplained deposits are something that meets the state definition of income or whether they can be excluded. Remember that if anything shows up in the documentation that's being used, they are fair game and are subject to monitoring. As discussed yesterday, applicants may not redact or otherwise alter their income documentation that they're submitting. Individual income amounts of $1 or less do not need to be counted. For instance, monthly or quarterly interest earned on most applicants' bank accounts can most likely be disregarded. Try to simplify wherever you can, and I recognize I'm saying this after I just went through an extremely unwieldy and complicated process. But if you have a pay stub where the year-to-date gross is equal to the current pay, then you automatically know off the bat that that's going to be a first pay stub at a new job. Therefore, there's not going to be a need to do any math. You just count all that income. Likewise, if you know that somebody started a job within the past 3 months, document that, and then you can count the entire pay stub as income, as it could not possibly count for more than 3 months. And in general, the only reason to request a last known employer report from the DWD is if the applicant is claiming unemployment income. But that being said, remember that if you have a reason to believe that an applicant is being deceptive, non-compliant, or potentially fraudulent, you do have the right to request this report as part of your investigation of that application compliance. But do remember that we still are not detectives. We do have a federal responsibility to be cognizant of fraud, waste, and abuse, but also kind of weigh that out with our belief and understanding that most clients are not trying to defraud the government. Honestly, most application non-compliance does stem from applicants not understanding the requirements or not realizing that certain pieces of income count as income. Just be open, transparent, and communicative with your applicants, and be ready to educate them and give second chances. I have found in the past that usually if you just educate and, like I said, give that second chance, let them know in the future this is what you need to do, you usually will see a change in that behavior. So income calculation is a little bit of an art and a little bit of a science. But I will say that what we're trying to do right now is we're trying to tip the scales back ever so slightly towards science and take away that ambiguity. We do believe that removing as much of that ambiguity as possible will be beneficial for intake as well as for applicants. And also remember that income calculation is only as good as supporting documentation that's being used for determination. And that's why we ask you to always kind of use the most preferred documentation first when possible, and to note in the case file why you are using less preferred documentation when that's necessary. All right. So I promised that I would go through.
We had a lot of questions in the chat that it might be good to address before you go through this. I know there were some that you might answer in this, but I know there are a few that could be helpful before you do the walkthrough of it.
All right, cool. Does someone on the IHCDA team wanna throw the questions at me, if possible?
I literally have them all typed out in a document already, so I can
Cool.
do that if you would like. But do you want them to just be about like starting at a certain place, or do you want me to start from the beginning of the day?
I was
You
just
have what-
thinking the ones that were the 13-week pay stub might be
Okay.
good to address before you do the walkthrough, unless you want to start at the beginning of the day, Tom.
Well, I'm actually wondering if going through the walkthrough of the 13-week pay stub will actually address a lot of those questions.
I think that it will address some of them.
Okay, I'm good with that. I'll keep my document pulled up, Tom, and people can just keep asking, and then
Okay.
at the end we can go back over what we've got.
Okay, cool.
Okay.
Perfect. So I am going to go back into sorry, I'm just trying to adjust some things here. Give me 1 second. By the way, at this point, it is 1:56. The fraud, waste, and abuse training video that I have is an hour long. I clearly am not going to get through this in 4 minutes, so I think we're just doing this for the rest of the day. So just wanted to give everyone that update and make sure that everyone is on the same page, that this is going to be the rest of our day. And I'll be sure that the fraud, waste, and abuse, honestly, it was a recording of last year's training. I'll just be sure that does carry over onto the partners page so that it is available to everyone for this year. All right, so I'm going to go back to sharing my screen here. All right, so I have an actual pay stub here from a program year 2022 file. As you can see, it is date stamped November 17th, 2021. I have changed the applicant name and address to preserve anonymity here. But I'm going to show both going through the 13-week method and the 3 most recent complete months method to show you kind of how the spreadsheet takes all those complicated steps that I took several minutes discussing and automates them for you. And also to show how the difference between the 13-week calculation and the 3 complete month calculation, while slightly different, is fairly negligible in its difference. So first, I'm going to go through the, sorry about that, did not mean to do that. So first, I will go through the 3 most recent complete months. So as we said, this is a November 17th application. And this is, as you can see, an October 29th pay stub. So it is it does represent all of the pay received as of the end of October. So number of months in this pay stub is going to be 10. And our year-to-date gross here is $26,944.14. So that does give us a gross pay, an average gross pay per month of $2,694.41. And the 3-month pay there is $8,083.24. Now let's take this same pay stub and run it through the 13-week method. So this is the spreadsheet we have for the 13-week calculation. And what I've done here is, and this might look a little bit small, so I'm going to see what I can do with that. Trying to make this as large as possible while still having all the necessary information on the screen. It's probably as good as I'm going to get with it. Okay, so what I've done with this is I've made any field that is fillable yellow, just to make it very clear where you fill in information. The rest of it should automatically populate. So when you're filling this out, we do have the household member name and application key just for internal reference to make it easy for intake staff to be sure that they are putting it with the correct file. We also do ask for employer here, and that is just to make it easy, both for internal QA and for monitoring if you have a household with multiple employers. So this company is TWGDRL. Application date, we already said, is 11/17. And so right off the bat, if you notice right here, it did populate the eligibility dates that we're looking at. So it said that we are looking, it populated the 11/17/2021 as the end of the eligibility period, and it automatically calculated back 13 weeks. So we're looking at August 18th, 2021 through 11/17 of 2021. So the check date now, we already said the check date is 10/29. And now if you notice, over here it says that the eligibility pay, which is what's represented on the pay stub, is 8/18/2021 through 10/29/2021. It also put 10/29/2021 as the end of the year-to-date dates. Pay period length. So here we can see that the pay period started on 10/10, ended on 10/23. So we know that this is a 2-week pay period. This pay period length field is set up as a pull down. So you either do 1 week or 2 weeks. So I'm going to enter 2 weeks. At this point, it's telling me that there are 44 weeks. You can see that right here, 44 weeks represented on this pay stub. Has this person worked from January 1st? Since I don't know otherwise, and since the check stub doesn't show any particular, any real signs that would lead us to believe that they recently started the job, I'm going to say yes. And so at this point, because I answered yes to have they worked since January 1st, it now registers that the year-to-date dates represented by this pay are January 1st, 2021 through October 29th, 2021. If that was a no, we would just want to enter approximately when they started. So let's say we talk to them and they say, oh, well, you know, I've got my first pay in March. It would be good for us to just put in March 1st, 2021 as that date, if that was the case. So if you notice, now that I did that, now that I put no for work from January 1st and put in the first pay as March 1st, those year-to-date dates now on the spreadsheet are March 1st, 2021 through October 29th. And it's now telling us that instead of, I think I said 44 earlier, it's now 34 weeks that are calculated on this pay stub. For now, let's get rid of that and go back to the yes. Brings it back to January 1st as the beginning of the year-to-date dates and 44 weeks on the pay stub. Still working? Yes, they are. So eligibility pay, because we said they are still working, the eligibility pay that we're looking at now is 8/18 through 11/17. If we said that they were no longer working, it would only calculate through October 29th. And you notice that it would then calculate 11 weeks of eligibility pay if that were the case. However, because they are still working, it goes through 11/17 and calculates for 13 weeks. Now let's put in that year-to-date total. So it was $26,944.14. So the 13-week spreadsheet determines that this person has a weekly mean gross of $612.37, and over the past 13 weeks has received $7,960.77. So if you compare that to the 3 most recent complete months, as you can see, it is there is a discrepancy there, and that's just because a lot of the detail that the 13-week method teases out is kind of elided over when you're generalizing to months. But really, a difference of $100 is fairly statistically insignificant. There, like I said, I am going to hit the or I mean, we obviously do have a slight discrepancy there, but either one of these, it's the margin is narrow enough that either one of these would be acceptable. In this case, this is for this applicant, this was a single applicant household. The LSP did use the 3 most recent complete month method. When I reviewed the file, they did come up exactly with this figure with the $8,083.24. The person would have been over income regardless of which method they used. But where the 13-week method really becomes useful is with that being able to kind of use any pay stub, even if it's in the middle of the month, and calculate from this date. We can say with reasonable certainty, as long as all the information as far as when they began worked and when they began working and whether they're still working is correct, that we have a reasonable certainty of this is what their past 13 weeks of income has looked like. And so I do want to just, again, show how some of those changes that we might make can impact this. So we talked earlier about what if, I think the example I gave, if they hadn't been working since the beginning of the year, I think we said March 1st. So let's say the person received no pay in January, February, and started working in March. See how that impacts? So at that point, yeah, so we're looking at the same amount of pay, but they received it in 2 fewer months. So we know that means they've actually been receiving more per week than what we had originally calculated. So in that case, they had received $792.47 average per week, which puts their eligibility income actually up to $10,302.17. If, on the other hand, they're no longer working and that 1029 pay stub was their last pay stub, then we can say, no, they're not still working. We know that they have 2 weeks without pay. That actually lowers their average weekly to $612.37 and makes their total eligibility income for that 11-week period $6,736.04. Again, from our perspective, this sheet kind of automates the calculation of a lot of those kind of more unwieldy and complicated calculations that we talked about on that last slide. Well, I think it was a series of 2 or 3 slides that went through everything that goes into the 13-week method. What we've done here is we've automated all that and made it so that the spreadsheet will actually do the work for your intake. And all that's required is to enter application date, check date, pay period length, gross year-to-date income, whether they've worked from January 1st, and if not, approximately when did they receive their first paycheck, and are they still working? So the idea here is to enter essentially 7 pieces of data and have all the work done for the intake.
Tom, there is one question. Angela Spurgeon says, why are you not showing this example in EAP Connect? Doesn't the earned income 2022 field do the same thing? I just thought that was a question that might be good answered in this moment.
Yeah, absolutely. Yeah. So we did work with Rowing on getting this put into EAP Connect this past year. This spreadsheet has been I sent the spreadsheet and all of the raw formulas to Rowing, and basically told them we want intake to be able to do this within the EAP Connect environment. And they did do that. As far as why I'm not showing that, that has a lot to do with how EAP Connect and the QA site functions as with us as a state, having a login as a state user. I'll be honest, as state users, you know, and this is actually good for everyone to understand. Because this is a kind of a control that's put in there so that we can't interfere with or undermine your determinations. As state users, we're actually fairly limited in what we are able to do and see when it comes to intake and data entry. So as far as why I'm not showing it to you in EAP Connect, it's because I literally can't. You know, we can't go in as IHCDA and change any of the work that you've done. And that is a very intentional thing. You know, we want we don't want it to seem like we're able to go behind your back and change work that you've done. So yeah, so I think that this would be something that, as far as like going more into the weeds and how this gets entered into EAP Connect, I think that would be an appropriate thing for us to ask Rowing to really walk through when they do the training on you know, the presentation training on all of the new enhancements for this year. But I am not able to show that to you today.
And she would just like to say that that's good, clarifying that using the EAP Connect tool is acceptable. So she appreciates it.
Absolutely. All right. So I am happy to go through any questions. I'm happy to go through. So I only had that one pay stub example prepared, but I'm happy to go through more demonstrations with either if someone has a sample pay stub available or wants to throw out numbers. I'm happy to do whatever the group needs. We've got 45 minutes left on the clock, and I would love to use it in a way that is most helpful and productive to the audience here.
Yeah, I can either go through the questions or another example.
Hi, I'm Ingrid here. Can I say something?
No?
Okay.
Of course, Ingrid.
What, you know, I wanted to say, when you started explaining the 13-week calculations, my eyes rolled in the back of my head because you went back to, you know, you picked this week and you picked that week. And if I hadn't used the 13-week calculator last year, I pretty much would have checked out by then. So I want to make sure that everybody knows using the 13-week calculator in EAP Connect is really simple, because we can use the check that the client provides no matter what the date is. And so, as complicated as that sounded when you first explained it, once you get into EAP Connect, it really is just a matter of entering correct information, and then EAP calculates that. And yeah, you made it sound more complicated than it ends up being. So I just want everybody encouraged to actually play with that and be hands-on with it, because the calculator is an EAP Connect and it's below the wages. So you do have to scroll down a little bit to get to that, but it is an easy it's an easy database to work with, or an easy calculation sheet to work with. So I just wanted to say it's not scary.
Thank you for that, Ingrid. Yeah, and if I can be completely transparent and honest, part of that was intentional. I was very aware that, I mean, Ingrid, you and I talked while I was trying to develop this. So, that a lot went into this, and that, it got very into the weeds. And that's one of the things that I really kind of wanted to drive home is really like a lot of complicated formulas and variables and considerations went into this, and we really did work our best to distill it down to, you enter these 7 pieces of data and it just does all of that work for you. So yeah, I sort of made that dry and complicated a little bit on purpose, just to drive home that point that, it's doing some complicated work, but it is doing all of that heavy lifting. So yeah, thank you for that.
Brad, do you want to go ahead and ask your question?
Okay, I got new earbuds. Can you hear me?
Mm-hmm.
Okay. So Thomas, if you would, or Renee as well, on our income sheets, you might have not seen the application key entered, is because we might have used intake to help us do some of those income calculations and attach it to the application, and then that helped us when it was time for processing. So is that a big deal that those application keys are not on those forms?
No.
Thank you.
No. No, it's just there. It's just there. It's highlighting yellow because it is a fillable field.
Right.
It's there. It's there for your reference if it's helpful for your process.
Okay. I just wanted to make sure. I was like, I did not put those in there because they were already done for me. Okay. Thank you.
Absolutely.
Let's go ahead and go with Julie Wilson. She has her hand up.
Sorry, I didn't realize I still had my hand up, and I just asked my question in the chat. But so for consistency of time frame for income, and I see somebody else asked a question about mixed income in a household. If we've got an IVA section 1 for undocumented income, we're using still the 3 complete months prior to application month, right? And then if someone else in that same household has earned income and we're doing the 13 weeks, that means it won't be consistent because the 13 weeks could end up right next to the actual application date, but that's fine, right? Does that make sense?
It does make sense. I think and I'll look at this in the manual. I'll talk about it internally with the team before I issue a firm guidance on it. I think my gut feeling on that right now, before I talk with the team about it, is that to me sounds like it's reasonable. You're not going to have an IVA that's going to be specific down to the week.
Right.
And it's part of what we're doing is trying to reduce the number of times we're having to go back to applicants and put more burden on them to provide more information. So again, with a final determination pending, once I've had some internal discussions, my initial knee-jerk thought on this right now is that that's a reasonable accommodation.
Well, I'm unmuted. Can I ask another question?
Absolutely.
So in your example of the IVA from just earlier today, so that client that applied in October, and they had they were basically probably using that IVA for their undocumented income in section 1. If they hadn't gone on to complete sections 2 and 3, that would have been okay, right? And then in that case too, we wouldn't have worried about that income from his parents paying rent.
Right. Yeah. So that is correct, because Section 3 is technically only required if they if they report any months of zero income. As it turns out, the way I filled out that that sample IVA, and because I've processed so many IVAs, I know that a lot of times, even when you tell an applicant you just need to do this for 3 months, they'll kind of do like, they might fill out the entire year, they might fill out 6 months worth, whatever. So I
Right.
kind of filled that out as 4 months. And I mean, the other thing that I did with that IVA is, I had down there that the client signed it on October 19th, I think, but I didn't have the actual application date on there. So like, it's very possible that that might have been a November application, in which case you would need to count that October 0 that they had disclosed. But I kind of eluded over that during this presentation, because I was pretty eager to get to the
Gotcha.
demonstration here towards the end.
Final comment, and then I'll mute again. I'm still not a fan of those gotcha boxes on there, because I just feel like clients don't understand them. And the best example being, they'll always put paid to me for their SNAP, which to me means that if their parents may be paying the landlord directly, but the client's putting, well, my parents paid it, so that's kind of paid to me. Not a fan of those, because I think it confuses clients and it kind of feels a little unfair. But I'm going to mute again, and thanks for your help with the other stuff.
Yeah, no, that's appreciated. And those boxes, those are something that I think we can look at. It's not intended to be a trick. It's not intended to be a gotcha. And as you know, Julie, those that kind of format of the form does predate my tenure in this position. My sense is that it's there to show the feds that we are that we do have controls in there to determine the difference between this irregular income that might be received directly by the individual and not. But that's something that we can look a bit further into in coming years. So thank you for that feedback.
Okay. Let's see. Now, Rosa just put her hand up, but we have lots in the chat, so I don't know how you want to go about this. This is your show, so you just tell me what you want to do.
I'm still on dealer's choice, Ashley. Seriously,
Okay. Rosa, go ahead while I get back up here on the chat.
My question is similar to goes back to Julie's question about the IVA. If they did not complete the top portion, does that third section have to have actual dollar amounts? Or can it just say parents? Can it say food stamps? Other friend? We get a lot that they put 0 for everything.
yeah. I would say honestly, if it's paid to a third party, I mean, they might not even know how much that is. I think it would be you would at least want to confirm that, if they don't know, that's filled in unknown. I think if it's paid to them, again, kind of going back to what I said to Julie about my understanding of why the paid to me box is there, I think we do need to have at least an estimate of that. And again, that can be just gotten through a phone conversation. You don't necessarily have to have the applicant completely fill out the form again. You can just have a phone conversation, document it. But I think it's reasonable, if it's not being paid directly to them, to have unknown or just an estimate as the amount. It's definitely not worth marking the application incomplete over if that's the only issue, if that's kind of what you're getting at.
Yes, because we have very many of those.
Yep. Yeah. I kind of figured that's kind of what you're getting at. And yeah, I don't think it's worth holding up an entire application over. I think that's something that you can have a conversation with the applicant, document the conversation, make the necessary changes, and move forward.
Okay, to
Is that helpful?
It is. But
Great.
to that, I'm going to
Yes.
add,
Okay.
we have tried calling these people. We get no responses.
Mhm.
After 1 or 2 attempts of calling and trying to reach them and can't get through, what would be our status, I guess I would say?
Yeah, no, that is a great question. And that actually does bring me to a point where I'm wondering if, even though I think that in general, it's again, having that discussion is a lot easier than going through the incomplete process, but just in order to be consistent with our policies and with what we tell the feds we do, I think we might have to go to the incomplete on that, if you're not able to get a response from them.
Okay. Thank you.
Obviously, we would prefer to avoid that. But we do need to show the feds that we're capturing what we say we're capturing, and that we are considering what we say we're considering as income.
Okay, so if we document, we called them yesterday and we called them again today, and both days there's no responses, then we're good to either deny the application because we can't get a hold of them.
Yeah, I mean, at that point, I think that because of the way the policy is written, you would have to issue the incomplete letter and give them 14 days to respond. But I would say on day 14, absolutely.
Okay.
Yeah.
Yeah, I was already
with the
thinking
denial.
past the 14th day.
Yeah,
Okay. Thank you.
absolutely.
All right, going back up to the top. Brad mentioned the request of earnings form needing to be updated for the 3 months. Is that, I'm assuming the matrix form? Yeah, so those have been updated already, so those will be ready, right?
No, it was actually that's been answered.
Okay, perfect.
He answered it. I was confused
Okay.
on the request of earnings information form. The state earnings are not updated accurately. They're like 3
Gotcha.
months behind.
Okay.
So I didn't know if he meant the request of earnings from the employer or from the state. And when you were talking on one of the slides, I got my answer. So, but yeah, thanks anyways.
Okay.
Fair enough.
All right.
But I'll keep my hand up because I do have another question soon.
Okay, let me get through a few more here and then I'll come back to you. Let's see. IVAs are only acceptable if we've run a DWD. I don't know if that got answered.
No, DWDs are not required for IVAs anymore. DWDs are only actually required when the applicant discloses that they have received unemployment insurance income, and they have not provided a printout of their own uplink report. DWDs may be run if you suspect that an applicant is being deceptive, non-compliant, or fraudulent. They are a tool that's available to you, but the only time that you actually have to run a DWD is for unemployment as a source of income.
Okay. And I'll just say that was Lisa. So if you have any, if that does not answer your question, just let us know. Okay. If the applicant is not working, are we required to run a work one for them, or is it only for the customer who is collecting unemployment? And that was Cindy.
Yeah, so that yeah, that goes back to the one that we just addressed, that it did used to be a requirement that if someone turned in an IVA showing zero income for any month, that you had to run a DWD on that applicant also. But no, we did do away with that requirement. You know, the applicant is already signing the IVA under penalties of fraud and perjury. That's good enough for us, especially since, as we said, we know that there's always going to be at least a month lag time, sometimes 3 or 4 months of lag time with those DWD reports.
Let's see. I'm gonna read this one. It's from Hannah Banco Storm. We had issues with the pay stub 13-week calculator from last year, over calculating gross income for people who had not been at a job for a full 13. I'm assuming she meant 13 weeks, not 13 months.
Actually, I think you got muted.
Oh, did I?
Oh, I can hear
I
you.
can't hear you.
I
Oh,
can hear.
everyone else can, Rosa.
I can hear.
I think you muted me, Rosa.
Sorry.
It's okay. Okay. So example, it's February 3rd. Someone has only been at a job for 5 weeks of 2023, and it's calculating forward to 13 weeks, but it's not an accurate representation of their income, showing more than they have actually earned. So they're not sure how to address that. And again, I apologize if this has already been answered.
Yeah, no, that one hasn't been answered. So Hannah, I'm gonna share my screen again real quick. Okay, so Hannah, do you remember with those ones, were you so if you notice at the bottom of this workbook, I actually do have a second sheet, which is for a 2022 pay stub. And it calculates slightly differently to reflect, especially for those first 13 weeks of the year. I haven't quite figured out how to integrate both an end of year and like a beginning of year calculation. So we did have this second sheet on the workbook, which specifically was altered to handle beginning of year calculations. Do you happen to remember, were you using that, or were you entering on the first sheet?
We did use that, but
Okay.
like we were running into it with like that, like where we were calculating pay stubs from 2 separate years, but we were also running into it just in any situation where somebody hadn't been at a job for 13 weeks, like say that they had just started their job, 4 weeks ago or whatever. Sometimes it was like over calculating.
Okay.
And then I was just actually in those situations going back to like the original worksheet that we used to use just for those situations. And then so that was the only thing, is sometimes it was actually showing more income than what the pay stub was showing for the gross. So
yeah. Yeah, and we absolutely don't want that to happen. So thank you for bringing that to my attention. Over the next couple weeks, I am going to take another really hard look at the formulas here and see if maybe I did, it's very, very, as you guys saw, it's some pretty complicated calculations that we're working with there, and it's very possible that for, specific situations like that, I might have messed something up. So I'm going to be happy to take another look at that, take a hard look at that before we release the new spreadsheets.
Okay, sounds good. Thank you.
Thank you.
Okay. Let's see here. Is a DWD or request for earnings preferred for self-declared income? From Lisa Ritterskamp.
Lisa, would you mind taking yourself off mute and clarifying? I'm not quite sure I'm quite getting what you're asking.
So if a person, for example, on an IVA
Mhm.
at the top says that they got income from a business of some kind and they can't get the pay stub, which they tell us that a lot. And so they
Okay.
just write down $250 and they say that they got it from, driving the Uber car or something. So do I need to have would you prefer a DWD or just a request for earnings? I think I have the answer, but go ahead.
Yeah, the request for earnings.
Yes, that's what I thought. So DWDs are only for unemployment.
Yeah. I mean, at this
Okay,
point,
got it.
with reporting delay, the DWDs are less
Yeah.
and less useful for us. So
I agree. Okay, thank you so much.
thank you. Good question.
Okay. If EAP Connect has the 13-week calculator, then why would you need to do an additional document, as in the 13-week spreadsheet? And I think you kind of already went over that. You were just showing kind of what goes behind it.
Yeah, if everything is entered into the onboard calculator on EAP Connect, that counts as your documentation. But if you have intake using this spreadsheet and then just entering, oh, here's how much they got, then you would want them to either save a copy of it and upload it, or scan it and upload it.
Clients often tell me that no one and no agency has helped them during the 3 months. Is it okay to put that from Pam Baker? And she may have to come off mute to explain that a little bit, but
For the
I'm guessing
IVA.
that's for section 3 of the IVA.
Yes.
Yeah, I mean, we definitely can take the verbal confirmation. We just want to be sure that they understand that we're not just talking about other agencies, but we're talking about any, support they might have received. It could have been a friend, family member. As long as they, verify that they haven't received any payment from anyone, we're good to go.
okay. And this is a good one from actually Stephanie from inside our own team, not our team, from IHCDA. If an applicant received a dual payee check from the IERA, so our rental assistance program, does that count as income?
That is a fantastic question. No, any federally provided benefits such as that from any, I believe IRA is a block grant. So any block grant benefits are excluded as income. Much in the same way as EAP benefits should not be counted as income for anyone applying for any other benefits through any other programs.
Thank you, Stephanie. If you get it from Uplink, and sorry, Elaine, I'm sure he'll know what you're talking about, what it is, then am I correct that, oh, there you go, the DWD is not needed for unemployment? I already answered that, I think.
Yep, the last known employer report should give you the same information that's in the Uplink. So if you have a timely Uplink printout, you're good.
Can I add something to that?
Please
Because
do.
some of our LKE reports back did not include that additional stipend that was issued to our clients. So we had that on many cases, and therefore I went to Uplink only, and I have not touched DWD at all this last year, but one time. And that was because the client was struggling to get income from their employer. And it just happened to fit in a time period that the last 3 months would have been what that report would have been. Just throwing that out there.
Yeah, that's fascinating. That's good for me to know. And I am going to be reaching out to someone at DWD to ensure that they haven't yet again changed their LKE release request. So when I do that, I'm also going to ask them about whether LKE is going to be matching Uplink for this coming year. So it's gonna write that down now.
Can I interject something? We actually had 2 cases last year in which the client told us they were receiving unemployment and the LKE report showed nothing. So of course we had them document it on the IVA, but that was just interesting.
Quick question, Laura. Were they self-employed?
No.
Okay.
And our wait time on the ones that we did issue to DWD averaged 4 to 6 weeks. We didn't have any come back within a week for the ones that were issued or requested.
Has that been everyone else's experience?
This is Brad from Pace. Yes, same experiences. I do want to add that if that report came back blank, that means they was not eligible for state unemployment, but they could have gotten the federal stimulus unemployment, which will not be recorded on the LKE.
Yikes. Our turnaround time from the LKE website was 48 to 72 hours. We never had to wait very long.
Mine as well.
Interesting.
I think the one thing that's going to be great for this upcoming season is that we're not going to have to worry about any pandemic payments. So
Yeah.
I think that's going to make things easier as far as showing what's been reported and what's not reported on there.
Yeah.
And that was what Brad was saying was part of the reason why I asked if that person was self-employed or not. Because sometimes that is what would show up on that, is like it would show the state not having any income, but they still were eligible for the PUA.
Well, clearly the experiences with DWD and the last unemployed report have been inconsistent, to say the least. So I'm going to try to make part of my discussion with them kind of touch on the feasibility of getting a somewhat timely response. I'm pretty sure that there's a response time outlined on the request sheet itself, if I recall correctly. And I'll just I'll try to make sure everyone's on the same page with that. But yeah, that's Elaine, that's probably a good thing for everyone to keep in mind about between between discrepancies between the uplink and the LKE and the fact that you were having such a wait time. That might be a good thing for everyone to bear in mind, and that might be worth providing whatever additional support might be needed, if you have the capacity to do so, to help the applicant just log into Uplink and provide their own documentation, which is very, very much acceptable.
Yeah, we didn't have the time, but we made the time.
Yeah, just have to be very, very careful, because a lot of times when you are getting that information from the uplink, that's being sent in from the client, most likely it's a screenshot, and things are cut off, or there's nothing identifiable on there and things like that. So be very, very careful with that. Some clients that are more savvy with it do know how to go in and print off each one of the payment. It would kind of look like a payment voucher report. They know how to do that. it probably would be beneficial for you to instruct your intake staff on how to walk them through that process to help as well. Because if not, it could be very, very difficult for it could be very difficult for the clients to get that information if we don't know how to walk them through it.
Absolutely. We did a special training here just for my staff to say, here's what it looks like, here's what you have to have, and here's the information I have to have. So, I mean, there was a lot of times where the client kept resending and resending and resending, and finally we said, let's meet. And sometimes we did it over the phone, sometimes we did it in person, but we also requested that they change their password once we logged out. So.
All great examples and great ideas.
This is Brad from Pace, just throwing out something else. I used to work for DWD. So the local office in your area cannot help a client with unemployment at all. That's why I left DWD. So if you send your clients into a DWD office, they will not assist their own customers. They will be directed to a computer and they will be talking to somebody in Indianapolis through a computer. So just an FYI there.
Ingrid here. We actually had our local DWD office send folks that came to them that were not applying for energy assistance to get us to print out their wage histories for them. We didn't do it.
Oh, I was about to say,
was
what?
Just really yeah, we had people coming in, and so the receptionist would say, are you applying for energy assistance? And they're like, no, we need financial assistance from the hospital. You know, and so DWD actually sent them to us to get those printouts.
Come on, Ingrid, be a team player.
I can't even respond to that. I can't think of anything. Yeah,
No,
speechless.
Shame on the hospitals with not assisting them with that, because they are a public service entity and they should have backdoor access to that.
Yeah.
Well, funny that the DWD sent them to us to get information that they, that they provide.
Yep.
Okay, we've got about 11 minutes left, so I'll try to hurry and get through these. Will you be sending out an updated 13-week calculation sheet? I assume yes. So I'll go.
Yep, they'll come out with the manual and updated forms and appendices.
Okay. Okay. In the case that they no longer work, do we need an IVA for the 2 weeks without income?
No.
No. Yeah.
No. If it's like a full month, yeah, but not for a partial month.
Let's see. Okay. There's some talk about any updates that Rowing did in EAP Connect. I think Brad mentioned, but we'll make sure that any of the updates, enhancements that Rowing does are communicated. Brad, I think that's what you're referring to, so we'll make sure that occurs.
We'll make sure that Rowing actually does a demonstration too.
Yeah, absolutely. If client had provided check dated 10/15, would 13-week spreadsheet still be used, or would the 10/29 check need to be requested from them?
Yeah. So I guess this is in I'm guessing this is in reference to the example I went through with the 11/17 application date. So we definitely prefer to have either the most recent pay stub or the one from the end of the most recent complete month. But I think one of the cool things about the 13-week pay calculator is technically the way it works, as long as that pay date falls somewhere within those eligibility dates, it is going to work. It's still going to capture what the average weekly gross is as of that pay week. It's still going to calculate how many weeks of pay is needed within the eligibility pay period, and it's still going to make that calculation. It might be a little bit different if you're using a 1015 pay stub instead of a 1029 pay stub. But honestly, if that's what you have, as long as it falls within the eligibility dates, it would work. And in fact, sorry,
very fine.
I'm not going to do this right now because I know we only have 8 minutes left. But I'm actually going to, since I have that 1029 pay stub, I'm actually going to play around with it a little bit later, and I'm actually going to, calculate what the year-to-date would have been on 1015 and see what kind of a discrepancy there is between those numbers. And I'll get back. I'll report back on Thursday to everyone.
Okay, this can't happen because we don't have enough time, but I'm just going to mention it. Elisa Kraus from our office, will you show a mixed income household pay stubs and some fixed government income? So maybe that's something we can work on internally. Next one, if we are expected to be consistent with timeframes with income and we are using someone's IVA, section 1 for undocumented income, along with someone else's earned income in the 13 weeks, does that mean we are using the 3 months prior to application month for the IVA along with the 13 weeks up to whatever the most recent pay stub date is for the earned income?
We already kind of talked about that one.
Okay.
I was gonna say, I think this
Sorry,
very similar to
I'm
something I
trying.
answered for Julie.
Yep.
It's a reasonable flexibility.
Okay. And then just so everyone knows, the field income tab can in the EAP Connect for the 13-week calculator can be found. It's called the Earned Income 2022. That is what it's called. Okay. See. Okay, in section 3 of the IVA, if they mark that the utility help is paid directly to utility, would that cause an issue with proving they have an energy burden? From Julie Hardesty.
No.
Any word on trying to get Illinois unemployment like we do for Indiana? From Rosa.
Rosa, let me double check on that. I actually at NIETA this year, I made good contact with my counterparts in Illinois. So I will double check with them and see if they have any tips for me or any forms that I can borrow or even a contact I can bother over there.
Sounds great. Thank you.
Yep.
You might have already kind of touched on this, but with employment like DoorDash, where people get paid daily, but gross income is not shown on their statements, would you use the IVA to show their income or use what documentation they do have? Often all they can do is provide our screenshot statements showing only net income.
Yeah, I hate what gig work has done for our income documentation. I think that's something I probably need to, I'm going to be perfectly honest. I think I probably need to have some internal discussions with the team and come up with actual guidance on that, because that really has changed the entire playing field when it comes to documenting some of this income. And I know it's something that when I was at SCAP, I used to struggle with. And, as the community programs manager for EAP, I'm acknowledging that ICDA needs to issue some guidance on this. So I'm going to work on that. I can't promise it will be ready in time for distributing the manual. But I'm going to try to at least issue some stopgap guidance and then get something more permanent as soon as I can.
All right, and then that caught us up to all the conversation about the DWD turnarounds. And then the last one, it looks like, no, I think, let's see. Sorry, I guess, Rosa, I think that last question would have been, can we accept the request of earnings sorry, it moved on me, complete by the client, not the employer? Not sure if this was answered.
No,
Could you repeat that?
no, you can't. It cannot be completed by the client. It has to be completed by the employer. She's talking about the request for earnings from the employer.
Yeah, so that's the form where it's strongly urged that rather than giving it to the applicant to give to their employer, it's strongly urged that you get their signature on it, and then get the contact information of the employer, and then contact the employer yourself and figure out how to best get it to the employer.
Okay, can I jump in on that real quick?
Yeah.
If we give it to the client and they complete it, and hypothetically they complete who the HR person is, who the email, who a phone number is, and everything, we can use that information to contact that particular person they labeled as their manager, HR, or whatever the case is.
Yes. Yeah. You could do that. I would strongly advise you to have a serious discussion with the applicant, though, about the fact that in order to do that, they would have had to have signed someone else's name to a form under penalties of fraud and perjury.
Okay.
Because we do, I believe that form does list, everything below needs to be completed by a representative of the company, and that it requires the signature of that person. So yeah, to me that's similar to someone filling out and signing their own landlord affidavit on behalf of the landlord.
Okay. So in the case that they just fill the top portion off, and they submit it back with their signature, I guess how would we go about finding out how to contact the employer if there's no record?
Yes, that's where like you would have that conversation with the applicant, and if they say they need it, honestly, when you give them the form, I would try to ask them at that time, who is your employer that you're requesting these from, and what's their contact information.
Okay.
Yeah.
Okay. Brad, did you have another question?
Yeah, just real quick on the IVA form, 99.9% of the time it was blank on an online application. Can we still do self-declaration over the phone with the client to get that completed?
Yes.
Thank you.
Absolutely.
All right, I think this will be the last one in the chat. How long do you give an employer to provide the earnings info?
That's a good question. And that's something that I haven't really given a lot of thought to. I would probably, because again, you're holding up someone's eligibility determination over this. I would probably give a good 2 business days, and if you haven't at least gotten an acknowledgement at that point, try to follow up with them. If I, and I recognize that we need to have more firm guidance on this, so I'm kind of spitballing here before I've talked with the rest of my team, which I know can be dangerous. But my thought is, so try to follow up again after 2 business days. And if at the end of, I mean, we give applicants 2 weeks, right? So if at the end of 2 weeks you still haven't gotten anything, I mean, at that point, I would say just accept the IBA. But again, I will talk with the rest of the team and come to a consensus on that and get more firm guidance out on that.
We have got through hands. We got through the chat for today. And obviously we did not get through the chat from yesterday, but however we want to handle that, Tom, we will get through those as well.
We'll
A
get through
different day.
those on Tuesday.
Right.
Which, thank you for reminding me of that, Ashley. One last thing before I end this session today. So I do understand, first of all, I want to thank everyone for their understanding and flexibility yesterday when I was not able to be here live. I hope that those recordings worked out okay for you. So I do understand from what I've been told that there was a request to extend next week's Q&A session, which is usually an hour to 2 hours, which I totally get. That's totally reasonable. I understand that the request was to push it earlier rather than later. And push it from so usually it's 2 to 3. I understand the preference was to push it to 1 to 3. I do have a standing meeting on my calendar on Tuesdays from 1 to 1:30. It's something I've had to cancel a couple times. Obviously, could not have it today. I really, really would like to honor that meeting next week. So my compromise is everyone okay with, instead of pushing it to 1 to 3 and instead of doing it 2 to 4, can we do 1:30 to 3:30?
Sure.
Okay. Not seeing or hearing any loud objection to that, so I'm going to make that change, make it 1:30 to 3:30. Thank you everyone for your understanding and flexibility with that. And yeah, it's 3:04 now, so we're just about right on the dot with when we were supposed to end. Tomorrow is going to be the water session led by Ashley. I might be here for part of it, but I do have an EAP board meeting tomorrow, which is why we had to break up the EAP sessions. And then we will be back on Thursday to go over budget management and transmittals and payments and things like that, which is why we requested that that fiscal staff also be included on the Thursday training. So thank you, everyone. Thank you for all the wonderful questions. Thank you for your attention. And if not tomorrow, I'll see everyone on Thursday.
And one more thing, I did
Yeah.
send out the notes from the listening call from the 19th. So if you did not receive that for some reason, just send me an email and let me know. I should have got to everyone, but just in case something went weird, just please let me know so that doesn't continue. All right. See you tomorrow.
Thanks, everyone.
Thank you.
Thanks, bye.